Thanks a lot, Mandy Dury. They're live from our U.S. headquarters. Let's get over to Washington, D.C. Yu-Dee Chang is standing by. He is principal, also chief advisor at ACE Investment Strategist. Yu-Dee, great to see you. Always appreciate your time. What do you make of this Korean clash?
Well, it's kind of interesting. I think it's different perspective. Geopolitical risk, nobody likes. Uncertainties with turmoil in the markets, nobody likes. But I think in the U.S., the reaction is slightly different. It's pretty much like the boy who cried wolf again, a spoiled brat wants something from the world, so here he goes again. So we don't like it, but I think basically people are still looking at the fundamentals rather than just one aberration.
You know, we've got a lot of investors out there who've made a bit of cash this year. Do you think investors are just skittish anyway heading into year end?
Yeah, there's no doubt about it. No, if you look, this market, especially the U.S. market, made a bottom back in March of 2009. So over the past 20 months, the market has had a tremendous run-up, right? But in between, it had about 9 so-called pullbacks of 3% and more. This will be the 9th one. Don't forget, since July, the market has had a run-up of about 21% or so. So we're pulling back about 5% of it using the so-called European resurgence of European debt problem, using this geopolitical risk, maybe in the Chinese raising of the interest rate, and maybe the fallout of the QE2 as excuses at year end, taking some profit off the table.
So Yu-Dee, then is it warranted as an investor looking at all of these risks and certainly negatives out there? How do you want to navigate this? Do you think that the selling is warranted? Should we go to the sidelines for a bit until some of the smoke clears?
Yeah, I think that's a good question. I think it's always been, it has been a tale of two cities. On one hand, no doubt, if you look at a lot of fundamentals, like Mandy was talking about, the U.S. economy is growing in the third quarter. So you look at the economy, there's still a lot of positives in the economy. On the other hand, no doubt, there's still a lot of pitfalls, right? So we still believe buying the dips in the market and selling the rally is the way to go. And also, it has to be picking the sectors and picking the stocks. So after a huge run-up in the market, taking some profits off the table, waiting for the next opportunity to get back in it is the way to go. And right now, it looks like you need to take some profit off the table.
There's been a lot of expectations built into U.S. stocks. When you looked at the Fed minutes today and looked at their anticipation for growth next year in 2011, ranging from 3 to about 3.6%, and down from June forecast of about 3.5 to 4.2, is this telling us that U.S. stocks and earnings are going to live up to expectations in 2011?
Yeah, I think so. I think if you think about it, don't forget, also the stock market has been not on a overall basis, but on a sector-by-sector basis. So I think some sectors are definitely going to live up to its expectations and potential. Some might even exceed it. But yet, at the other hand, there are some other factors, such as construction and building materials, which may not live up to their so-called expectations. So it's not an overall market per se, but you have to go in there and pick the correct sectors.
Thanks for the perspective. Yu-Dee Chang from ACE Investment Strategies joining us. Coming up, as dawn breaks over the Korean Peninsula,